What's good, everybody? Today is August 28th. We're about to go through the entire price action from today. We're going to look at why I took a loss and some of the lessons that the market wants to show us today. So without further ado, let's just hop straight into it. All right, so just checking out the movement, you guys can see a little bit about our loss right here. It was pretty much like a bottom take of the entire move that I ended up taking a short. So let's just go through why I ended up taking that short, why I thought it was pretty good, and all that kind of stuff, right? So zooming out quickly, we have a similar situation to yesterday, where yesterday we opened the market and we had 3 overlapping draws in liquidity. So 1, 2, and then 3 we opened down here. We had a clean long setup. I was expecting to see a very similar thing play out in the morning, but instead what ended up happening was pretty different, right? So we ended up taking these. So morning opens and we're pretty much around this point, right? And we had put in an 8:30 news draw liquidity, right? So I'm just quickly marking out our buy side liquidity draws right here, because we're looking pretty much overall bullish on the day, right? So we're expecting to take some kind of long today unless the market shows us differently, right? So our overlapping or our draws in liquidity are going to be this same high right here, and then this same high, and then over here is that bigger time frame draw liquidity up here. So opening the market, we're pretty much at this point right here, right? Where zooming to the 15-minute, we had put in this 8:30. We had 8:30 news, right? So that gives us a range, right? So marking out this is the bottom of our range. This is this low down here. I think this was some kind of London low. Then we have Asia low down here. So quickly drawing that in. Boom. Now doing the same exact thing on NQ gives us the same thing. Go ahead, 8:30, and then it's 8:30. Yeah, and then London low, Asia low, all this good stuff, right? So what do we see the second that the market opens, right? We're looking at the market and we're watching it generate all of this generated liquidity, right? Now to me, I'm looking at this and I'm saying, okay, this is looking pretty clean. If we can see the market open and up taking this high, and then we can look to see some kind of short setup before we end up seeing that later in the day long setup, right? Because if the market's showing me, hey, we pretty much want to be long or short biased because we're generating all this liquidity right here. We're generating this. We have news drawn liquidity right here. If the market shows me all of that, that's going to tell me, yo, okay, we might want to go ahead and be short biased first before we end up being long biased, right? So I'm looking to see that short setup play out. It ends up playing out, the setup I want to take ends up playing out like a minute or two before open, where we see this internal draw get taken, then we see change in the state on this level, tapped, and we see like literally a 3 candle move to the downside, right? So what that does is this ends up going ahead and running all of this generated liquidity, right? So at this point, I'm now still I'm pretty like, I want to take a step back and I want to watch, because I don't know if we still have a lot of generated liquidity for the market to go ahead and run for a short setup, right? So now I say to myself, if I'm going to take a short setup, I want to, number one, see these two highs get swept, which we end up seeing. And then also I want to see this bigger time frame draw get swept. No, we didn't end up seeing that bigger time frame draw get swept. On either index, that one never got hit until later in the day, right about here, right? So it never ends up getting hit. So I'm pretty hesitant to take a short. We see at 9:30, we end up pumping up, taking that high. Then we put in first presented for value up right here at 9:35. If you would have traded this 1-minute model down here, just hopping in on the first presented and then trading it to London low or whatever, because we have a sweep of London high, now we take it to London low. I mean, it's literally like a very easy textbook model, right? That would have been 2.13 R, super efficient, and you could have left runners to Asia low, boom. Now, what did I end up taking, right? You guys know I like to trade based off market maker models, and I like to look at where the model is developing, and if there's an internal model, I'll go ahead and take that internal model, right? So zooming out, I end up seeing, we see changing the state on the 5 and the 15-minute, right? Validating us down to the bottom of this model, which would be right here. And then I see price continue displacing through that level, right? So when I see continued displacement, I then think, okay, yeah, we should go ahead and go lower, right? And it's very rare that we'll see this 15-minute change in the state and the complete invalidation of all this order flow without going in and running lower, right? So in my opinion, I'm expecting us to continue running to this low, which we end up doing. And from there was really no entry to get in on that big move if you didn't end up taking that first presented for value gap, right? In my opinion, there was no really great entry there. So what did I end up taking? I saw that if you look as well, NQ over here had been looking much stronger because we bounced at London low, where NQ went, or where ES over here went all the way down to Asia low and then started moving higher, right? So NQ looks a little bit stronger, but I was looking to trade. I was looking to trade NQ because if we look over here, we still have lower to go. We saw our 5-minute change in the state. Everything looks really primed to now go ahead and see a continued push down to Asian low. However, we didn't end up seeing that, right? So what did I see? I saw change in the state, 5-minute change in the state right here. I see 5-minute fair value gap. And now I'm looking for, do we want to reverse? Because keep in mind, we saw this bigger time frame draw on liquidity, this bigger time frame buy side level, right? So I'm expecting this to get ran at some point throughout the day, but I'm looking to take a small scalp to the downside here, right? Where, because I believe that NQ still has lower to go, and as well, let me show you this, right? I'm expecting, like I said, to see a eventual long setup, right? But when we see a long setup, the thing that I want to keep in mind is the high resistant moved lower, and then the low resistant move to the upside, which is the thing I want to trade, right? So when I see a high resistant move to the downside, and I've talked about this a ton before, when I see a high resistant move to the upside, and I'm looking to trade the upside, it's most likely telling me that price isn't ready to go yet, because the trades that I want to be taking to either direction are going to be low resistant and a high efficiency, right? So when I see high resistant and low efficiency moves, it tells me we probably want to go manipulate a low or a high again, go in the opposite direction, stop out whoever got in on that initial move, and then go, right? So what I end up seeing is that exact thing we just talked about. I end up seeing the low efficiency, high resistant move to the upside right here to tap into this 5-minute value gap. And then from there, I'm looking to trade this model back to the downside right here and end up taking and trading this model right here. So the model here would have been, drawing this quickly out, the curve would go right here, buy side of the curve up to that fair value gap to run these highs. And then we end up seeing sell side of the curve on the opposite side. And as well, we got all of our confirmations we needed. I saw 15-second, didn't give us any kind of inverse fair value gap, but I believe we had, no kind of inverse fair value gap. But if we check this out, we ended up having a SMT at these highs where NQ made its lower high, higher high, and this one made higher high, lower high, right? So we have that little bit of SMT at these highs. Then we also have the external SMT right here, where we didn't have taken this draw on ES. So ES was looking much weaker, but NQ was looking more clean. So I want to trade NQ. I take my entry right on that level right here, 30-second change of the state, stop at the high, look for this level right here, and then from there I would want to trade runners down to here, and then that would be my full trade, right? So I placed this in and immediately stopped out, right? Now, I don't think there was really anything wrong with my analysis throughout the day. The one thing I recognize is that looking at the bigger time frame, this is a really clean long setup, right? But the structure in the actual on the 1 minute chart just didn't validate it, or else you bet I would have been taking a long, right? I was able to switch my bias a little bit and decide I think we can take a scalp to the downside and trade that last final manipulation leg that I'm expecting to get put in. I was able to say that because I saw the low efficiency in price moving to the upside, rebalancing to a fair value gap. So I expected that we had a little bit lower to go, right? So looking at this, I wanted to see this low get taken right here, but now looking back, what I see is that we have an SMT placed in on this 1 hour level right here. So that's Asia low, right? SMT placed in. And then as well, this SMT just doesn't happen at any point, right? We have a bigger time frame buy side level above us. So we have a bigger time frame, a bigger time frame long bias, right? However, we're also pushing lower, manipulating lower in the morning to go ahead and place an SMT in within a fair value gap, right? So that's the area in which I expect price to go ahead and reject. So we see an SMT in an area in which we expect to reject that's in line with our bias. That's when we want to take that 1 minute model, right? So when I want to take the 1 minute change of the state, right? Trading this change of the state right here, getting tapped, stop at the low, and then end up leaving for drawn liquidity here, right? So this would have played, and if you took this, good job. I just don't think this is my kind of trade because number one, I want to see displacement. I want to see displacement past the change of the state level, and as well I want to see more generated liquidity, right? So this wouldn't really be an A+ long setup for me, especially minding the efficiency that price did this initial move with, because a lot of time we can tell the efficiency that the trade will play out with just by looking at that first initial move, right? So when this first initial move gets put in and there's no inverse fair value gap, there's no fair value gaps that get put in the leg, and this initial move that could have happened with 2 candlesticks happens with about like 5 to 6, right? How many is this? 7 candlesticks. That is not what I want to be trading, right? I want to only be trading this if it happens swift like this, right? Where I'm seeing low resistant to the upside, a manipulation, a quick, swift manipulation lower, and then I see low resistance to the upside, right? That's a setup that I want to be trading, where I then look for that tap back into that level, and then I'd go for these longs. But this only happens if we have high resistant move to the downside, which gives us a low resistant liquidity run, right? Like later in the day, we could definitely go ahead and see a low resistant liquidity run down to here, maybe in the PM session, but it's not something that I'm super interested in trading. But overall, I think that the long setup was fine if you want to take it. It was just too inefficient for me, in my opinion. But I think the bigger thing to look at is like all of our analysis is going to be a little bit different. And like this is what I told myself today when I took this loss. I wasn't too mad about it because of this factor, right? There's 2 types of losses we can take as traders, right? There's the bad kind of loss where we don't follow our system and we take some kind of trade maybe without a confirmation, or we just break a rule, right? We overtrade, something like that. That's a bad kind of loss that we have to go ahead and do deep self-reflection on, and then actually try to figure out the problem and fix that problem, right? The second type of loss is a good loss, right? Where we follow our system and the only issue is that our analysis is wrong. And here's the system that I use in my brain, right? People say, yeah, you can never have a 100% win rate. And that's true, that none of us as humans and executors are going to get a 100% win rate, but we can get pretty damn close to it if our analysis is always right every single time, right? So our ability to be able to go ahead and make that win rate happen is because make that 100% win rate possible is because we're going to have really great analysis, right? So the issue is that the analysis is what separates us from that 75% win rate and that 100% win rate, right? Both follow the system 100%, but the analysis of the bias and the when to execute and all that kind of stuff, right? That is the only separator between what's going to tell me, that, or what's going to give me the 75% win rate versus the 100% win rate. And today was an example of where my analysis was just that 1% wrong, because 90% of the time, if you trade the same models as me, we're going to be taking the same exact trades, right? But there's also that 10% of that time where we're going to be taking different trades. And that's because that 10%, our analysis is just a little bit different on the day, right? That's really the only difference between that 75% win rate and that 100% win rate, right? If you're following what I'm saying, it's that our job is to make sure we can get as good of analysis as possible, because that's the human interpretation part of actually trading our model. The rest is just following the rules, and following the rules is the easy part, but getting that analysis right is a little bit of the difficult part to get an 100% correct analysis every single day. Most of the time, we're going to be getting you can live and be insanely prosperous off of a 60% win rate. So having a 75% win rate, 80% win rate is 100% fine. Like, you have such a great win rate and there's really nothing to worry about. So when I take a trade today, when my analysis was just a tiny bit off, I don't think that this is something that I should actually be that worried about, right? I don't think it's something bad to go ahead and beat myself up about and care a ton about. I think this is something I'm 100% perfect in going ahead and taking. So overall, I think it's a really great day to go back, go through some emotions, look at kind of what happened throughout the day, just dissect price efficiency. I think some lessons that show us kind of what happened today was low resistance to the downside, and then we see high resistance in the opposite direction. So that's kind of something to look at, right? When we want to be taking low resistance trades, we need to see high resistance in the opposite direction. So if you look super bigger time frame, high resistant run, right? And then we end up seeing a super low resistant run to the downside. Like right here, low resistance, all of this, right? High resistant run to the upside, setting up very low resistant liquidity run, and then we end up seeing that low resistant liquidity run right here. So I think overall, it's just something kind of to make sure we truly do understand the way we trade and all that. And if we took a win today, I think that's great. So whatever question you guys have with the analysis I do, just drop them in the comments. Any questions, anything, like any recommendations you have, anything like that, go ahead and drop them in the comments. I'll be the first to respond. So thank you all for listening. Hope you guys get some value from this video. Without further ado, I'm gonna let you boys go. So peace out.